On today's episode of the Cryptoverse, David Morgan appears on a webinar with the LODE project, confirming that he is still supporting it. CoinMarketCap may be getting the crypto community unnecessarily excited. A small tweak to our clarification regarding the state of Bitcoin Cash. There is a huge positive side to the Bitcoin price. And I'll wrap up by talking about the asset class that all investors seem to be running to. So those are the topics I want to cover in today's video. Timestamps, as always, are down in the description if you want to skip ahead to your favorite. If you are new around here and you would like to get rid of the ads, support the show, and earn cryptocurrency rewards on a daily basis, check out the website, thecryptoverse.show. If you click on that big blue button there that says Get Paid to Watch, there is a 2-minute explainer video that would explain exactly how you can support the show, get rid of the ads, and earn cryptocurrency rewards on a daily basis. It's good to do that right now because you're getting crypto at very cheap prices, and then, when it reinflates, it's going to be worth a lot more. But for now, we're going to get into the video. First thing I want to say is, wasn't yesterday just the most awful thumbnail I've ever created? I mean, look at this. This is absolutely terrible. I mean, yes, I did make it, but I just don't like looking at it. It makes me feel kind of queasy. But it did do its job. I had to give homage to that because that is bloody awful, right? And as soon as I'd created it, I was like, oh God, I've got to use that. Go get people's attention, right? Anyway, that's all I wanted to say on that. I just want to acknowledge the horrendous thumbnail from yesterday. On to the next story. A quick follow-up on the LODE project, which is the silverback crypto that I spoke about yesterday. So in response to a call for information, one of my lovely patrons sent me a link to this video, which is this live webinar with LODE and David Morgan. So yes, he is still an advocate of this project. And while David does look like he just rolled out of bed and turned the camera on, he is actually there. On to the next story. Bitcoin has formed somewhat of a bottom at 3,500. Let's inspect the charts, see what that looks like. Bitcoin USD on Coinbase. Let's do a bit of a zoom here. So we've got some long tails forming. This is like a rounded bottom at around 3,500, bouncing off of that. Still no clear direction though. And this is where I said if you look at CoinMarketCap today, if I just flip over to it, you might get excited by seeing some double-digit growth and whatnot, but it's only the charts that show that growth in perspective, right? A gain has to be so much bigger if it comes after a drop. So what I mean by that is, for example, if you have a $100 coin that drops 30%, it goes to $70, right? If it then gains 30%, it only returns to $91, right? Because it's a percentage gain on a smaller amount, right? Now that might seem obvious, but I have to mention it in this context, right? So, I'm always talking about the value of perspective, and that's what the charts give you that a CoinMarketCap eyeball full doesn't, right? That's why I don't really take any notice of CoinMarketCap. The only thing I do pay attention to really is the most important number on CoinMarketCap is the daily volume. So right at the top, here, 24-hour volume, this to me is the most important number of them all. Because if this kept rising, if the daily volume kept rising consistently, believe it or not, that would actually solve a lot of the other problems that we have in crypto. I'm going to put forward an argument right now that liquidity is the number one problem that's the root cause, I believe, that's causing all of these symptoms, like manipulation. Let's not get into it today, but I'm just making the case for volume being the number one most important figure on CoinMarketCap. So let me know what you think to that in the comments below. On to the next story. I assumed everyone knew this, but then a conversation broke out in the patrons chat group yesterday, and I became aware that it's not the case. So just for the sake of clarity, during the Bitcoin Cash split, we were talking about Bitcoin ABC and we were talking about Bitcoin SV. Well, now there are two networks and they are coexisting. So Bitcoin ABC is now carrying the Bitcoin Cash name with the ticker symbol BCH. So that's just as it was before. The difference is that we now have a new blockchain entirely, a new coin called Bitcoin SV, and that has its own blockchain and so on. Now, as I said to my patrons, I have no intention of doing a tutorial video on how to claim your Bitcoin SV, but I do want to refer you to this article on the Ledger's website where they give you some guidance on how to split your coins. That is assuming you use a Ledger hardware wallet, which most of my students do. What's kind of funny is when you look at the mining pools on the two chains, let's go over to Coindance for this. Check this out. So side by side here, we have the two charts. Ooh, my goodness. For the benefit of the podcast listeners, we're looking at two pie charts side by side here. On the left, we have BCH, and on the right, we have SV. And the SV chain has a mining pool called SV pool, which accounts for 56% of the hashing power. That's a lot. Bitcoin Cash, on the other hand, as you can see, is much more distributed, with the biggest mining pool having like 19% of the hashing power, which is well within, risk tolerances. On to the next story. There is a huge positive side to the price of Bitcoin falling. And it gives me, or it gives you, us, all of us, people, many more opportunities to join the 21 million club. So you know that the maximum supply of Bitcoin, BTC, is 21 million. Well, the ability to own a whole Bitcoin is a nice badge of honor, right? And that's why we call it 21 million club. The opportunity to join the 21 million club is going to diminish over time. People thought they'd lost that privilege when it ran up to 20,000, but now the window has reopened. Plus, if Bitcoin becomes like the world's reserve currency for settlements, and you own 1/21 millionth of the world's total reserve currency liquidity supply, well, you'll be set for life, right? So how do I know this matters to people? Well, because people are like posting on Reddit like this, celebrating the fact that they now own one whole Bitcoin thanks to the price being within reach, which, like I said, many people just thought that possibility of owning a whole Bitcoin was long gone. So on the silver lining, if you like, the positive side to this whole retracement in the price is that people who wanted to buy and hold a whole Bitcoin now can, because it's $3,500, which is much more reasonable than $15,000 or $20,000. So that's another thing to consider in these market conditions. People who sold Bitcoin at 5K, 4K, 3.5K, there's always someone on the other side of that trade willing to buy it off you for those prices. So a point that's obvious, of course, because it's a trade with someone else. But I highlight that because often that gives you pause for thought. Before you hand over that Bitcoin at $3,000 or whatever it is, you're like, this other person wants to buy it at that price. So they think something different to me, or they know something different to me. So as long as you trade with conviction, right, and you're confident in your decisions. But I was talking to a friend of mine last night about this, and I was thinking, people who sell in the downturn, I don't think that's going to get rid of your anxiety, because then you'll be checking CoinMarketCap to see if it's turned around again. So say if you sold at $3,500, and then you'd be like, oh God, paranoid. What if it turns around the next minute and then starts going to 4, 5, 6, 7K? And you're like, oh no, right? So that's why you'd be checking it, because as soon as you let go of your Bitcoin, you're out of the market. As long as you don't look, you're okay. But if you've got the ability not to look, you can hodl, right? Because it's only watching the price fall that makes you want to give up your Bitcoin anyway. And constantly checking the price to see if it's going down further is what's giving you anxiety. If you decide to let go of it, you'll keep checking the price, because you don't want to be the guy that sold it at the bottom and then it turns around, right? Guy or girl or whatever. So I thought that was a funny observation as well. Just raising awareness as always. On to the next story. Finally, allow me to deliver on the title of today's video to prove that it's not a clickbait and switch. So the asset class that all investors seem to be running to is cash. Think about it. When money leaves the crypto space, where does it go? I've asked this question before. When the stock market valuations drop, where does that money go, right? You can't really track it precisely, because if like $1 billion leaves the stock market, that money might then go, it might be diluted into lots of other asset classes, and there's no appreciable increase in the other asset classes because it's spread out. But it has to go somewhere, because a drop in the valuation of, say, stocks, by definition, is people selling their assets. And they temporarily sell it into cash before then they put that money somewhere else. The question is, where are they going to park their money instead? If you want to pull your money out of a stock, you're thinking, well, I've got a better place to put it, surely. because it goes without saying that money is constantly chasing yield. But what if Mike Maloney is right and we are in the everything bubble where all asset classes are overvalued? In that case, where no yields justify the risks that come along with it, well, maybe a situation of an offer of no return with low risk may be your best option. So that's kind of cash, right? There's no return on it. It's actually, with inflation, decreasing in purchasing power, but anyway. I'll talk more about that in a second. So cash may be your best option if it doesn't actually pay any interest, but it's low risk, right? So maybe that's your best option in that case. Also consider that all price charts can be turned upside down and flipping the base and the terms currency. So if you haven't done my trading course, you probably should do, because I explain all that sort of stuff. But let me show you this in action to make it crystal clear for now. So I'm going to show you the gold USD price, and then we're gonna demonstrate this in real time. So I'm going to go to precious metals, gold. Let me zoom back out. Let's look at like May to, yeah, this should do it. So this is gold USD. Now, when we view the chart like this, all right, the base currency is always a unit of 1, and it's always priced in the terms currency. In this case, the dollar, right? So if we say gold USD, we're always talking about 1 unit of gold is how many dollars? And the terms currency is the one that fluctuates, which is the one here, right? $1,213 at time of recording. But if you flipped that ratio around, so instead of gold USD, you looked at the USD gold price, here's what it looks like. So all I did basically was took a screenshot, and then with my photo editing program, I just vertically flipped it. So now this is what the USD gold chart looks like. So now the USD is the base currency, so it shows $1 and how much gold it buys. So this would be like the gold price would be fluctuating in relation to $1 US. So this makes it clearer how, as the gold price drops, a single dollar is able to buy a greater and greater amount of gold, which is why the US dollar gold price chart goes up as the value of gold goes down, right? So because it's the purchasing power of the dollar that's increasing. So take that same idea and imagine that all asset values drop across the board. By definition, that means that the purchasing power is being transferred from all of those assets into cash, the cash that sellers receive as a result of their sale. Now, obviously, cash is not zero risk in itself. It's not a zero risk asset. We all know at the end of the day, it's just an illusion, and it has absolutely no scarcity whatsoever, isn't backed by anything, and really is not a good store of value if you are financially aware. So while many mainstream investors seem to be running to cash, in terms of a safe haven asset, while those regular investors are running to cash, I personally prefer to stick to good old gold, silver, and Bitcoin. But that's all I've got for you today. If you like this episode, go ahead, hit the like button. If you disliked it, hit the dislike button. Leave me a comment below with some feedback, and I'd very much appreciate it if you would get subscribed. Also, check out the online store. There's a bunch of merch in there that bears the Cryptoverse branding. If you buy something from the online store, not only do you get a nice physical product, you also help keep this channel going. Other than that, I will be back with the next episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.